Look at me. I want you to really listen to me right now, because we are talking about your hard-earned money, money that you have spent a lifetime accumulating so that you can feel safe, secure, and independent in your retirement years. Many of you watching have family, children, or grandchildren living overseas, or maybe you are planning to spend your own retirement years living abroad. Naturally, you need a way to send money across borders. You have probably seen the slick advertisements or had someone tell you to just use an app like Remitly because it is fast and cheap. But before you press a single button on your smartphone, you need to understand the true cost of convenience, because what you don't know will hurt you when you are in retirement or getting ready to step into it. Your financial strategy has to switch from accumulation to absolute protection. Every single dollar counts. So when an app tells you that they offer low fees, your gut reaction might be to think, great, I'm saving money. But I want you to ask yourself a very important question. How does a multi-billion-dollar financial company make money if they are charging you next to nothing in upfront fees? They do it through something called the exchange rate markup. This is the hidden trap that drains your retirement nest egg without you even realizing it. Here is how the game is played. You look at the official market exchange rate, what we call the mid-market rate. That is the real, honest value of the dollar compared to another currency. But when you go to send money through Remitly, they do not give you that rate. They pocket a percentage by offering you a worse rate, and that markup can easily range from 1% to 3% or more depending on the country you are sending to. Now, you might think a couple of percentage points doesn't sound like a lot. But if you are sending a significant sum, maybe you are transferring funds to buy a retirement property overseas, or sending a substantial gift to help a grandchild buy a home, that 2% hidden fee can instantly morph into hundreds or thousands of dollars vanishing directly out of your pocket and into theirs. That is money that should be funding your life, your health care, and your peace of mind, and then there is the fear. The absolute, stomach-churning fear that strikes when your money disappears into cyberspace and doesn't show up when it's supposed to. Remitly operates on two main tiers, Express and Economy. Express uses your debit or credit card and delivers the money almost instantly, but they hit you with higher upfront fees and potentially higher credit card cash advance charges that will absolutely destroy your budget. Economy is cheaper, using your bank account, but it takes days. What happens during those days? What happens if there is a verification delay? I hear from so many people in your exact stage of life who have had their accounts suddenly locked or flagged for compliance reviews right in the middle of a transaction. Imagine the panic. You are sitting at home, you have sent money for an urgent family medical emergency or a critical monthly living expense abroad, and suddenly you get an automated email saying your funds are on hold. You try to call, but you are trapped in an endless loop of automated customer service bots. There is no local branch you can walk into. There is no manager you can look in the eye and say, fix this, this is my livelihood. For a retiree, that lack of human accountability isn't just an inconvenience, it is a threat to your security. Digital-only platforms are fantastic when they work, but when they fail, you are entirely at the mercy of an algorithm. You also have to consider the strict limits they impose. When you first sign up for a service like this, they place heavy restrictions on how much money you can send within 24 hours, 30 days, or 180 days. If you are trying to manage a major, one-time retirement life event, like liquidating an asset or transferring an inheritance, these tiers can completely derail your timeline. To unlock higher limits, you have to upload deeply sensitive information, your social security number, bank statements, tax documents, and government IDs. In an era where identity theft targeting seniors is at an all-time high, handing over your most sacred financial data to a digital app should make you pause. Every single data point you upload is another door open to potential exposure. So, what is the actionable takeaway here? How do you protect yourself while still moving your money where it needs to go? First, you must stop looking only at the upfront fee. The upfront fee is a distraction. From this day forward, whenever you need to send money, I want you to look at the total guaranteed amount the recipient will get on the other end. Compare that number across multiple platforms. Look at dedicated foreign exchange brokers who specialize in large transfers and offer fixed, transparent rates. Second, if you do decide to use a digital service like Remitly for smaller, routine transfers, You must never send large sums all at once. Break it up. Test the waters. And never, ever send money close to a weekend or a holiday when bank processing times slow down and customer service lines choke up. Most importantly, you must have a backup plan. Never rely on a single digital platform as your sole lifeline for moving money. Keep a traditional bank wire option open, even if it costs a bit more upfront, because during an emergency, the ability to speak to a real human being at your local bank is worth every single penny. You have worked too hard, for too many years, to let your financial security be compromised by the illusion of a cheap transfer. Be smart, stay safe, and value your money because nobody is going to value it more than you.